Excel, yeah, I just, it's not my type of setup. If it had gapped down, I would have maybe had higher conviction on a mean reversion trade, but you know, it could work. I just, it's not my type of setup. It's hard to say. If it were to bounce, you know, it could very easily go back to 25 or something. It's hard. It's hard. Beely, yeah, thanks for. Oh my God. Wow. Do not override your sell rules, guys. Just don't do it. Pro tip. Like, learn from my mistakes, okay? I'm doing these mistakes so you don't have to, okay? That's why, you know, that's why you guys are following me. Learning from my mistakes. Do not override. This is why you have trailing stops, because you can think something is getting extended. You can have all these opinions, oh, the market is gonna pull back, blah, blah, blah. But you will not outsmart the 10 and the 20-day moving average. You will not. Over time, you can do it now and then, but over time, you will not outsmart those things. Yeah, extended can stay extended. Like I saw, where did I sell it? 75 or something, right? I was happy with my 50% move in 2 or 3 weeks. And now it's up another 30% since I sold it. Oh my God. This is like NVAX last year, where I sold it when it went up like 70, 80%, and then it went up another 150%, 140% after I sold it. That's why you have these trailing stops, because you never know when a stock is gonna, how high a stock is gonna go, right? They can go to, sometimes they can go straight up for weeks and months on end. But sometimes I kind of, you know, overthink things. T-Doc, if I like the flag, not really. T-Doc looks great on the weekly though. It looks great on a weekly. If you want like a position trade type of a setup, T-Doc could be it. On the daily, I think it's a bit choppy. I don't like it on the daily. It's not a great trading stock. But if you want a good position type of a trade, where you have a little bit of wider stop and go for a, you know, bigger move, I think T-Doc could be a candidate, definitely. It is setting up nicely. It's been going sideways for over a year, been building higher lows. It's a growth stock. You know, they're doing some exciting things. This is the type of stock and really works in this market. So, you know, be careful with these. I don't really recommend any of you, like newbies, to trade these mean reversion setups. It's better if you just, you know, master one setup at a time, the breakout setup. You're probably gonna be profitable earlier than if you try to trade several setups at the same time. You kind of need to master one setup first before you take on another. But it's never wrong to try several type of setups, because at the end of the day, it's all about finding something that fits your personality, something you're comfortable with. That's the most important thing. So obviously you can try out many different setups, but don't try to trade too many setups at the same time if you're new. How many stars was the Zillow setup? Today it's maybe 3 stars. Back here it was 5 stars. Back here when I bought it was 5 stars. RMO, yes, RMO was a 5-star mean reversion setup. So it was down what, 1, 2, 3, 4, 5 days in a row. Was down what, 52% from the highs? Yeah, 5 star. 5 star. Opening range highs was the entry. Yep. Really, this one I didn't even look at because it's too liquid for me personally. But yeah, 5 star. Yes. 5 star mean reversion play. It's the same principle on this longs and shorts. You know, something that's up a lot in, you know, if something is up a lot, like 3, 4, 5 days in a row, you know, it's not gonna keep going up forever. And the same thing with these things that make big moves and then have these big moves down. Like there's a good probability they will bounce. They don't have to. That's why you wait for these perfect setups where you have a good risk reward. If you're wrong, you only lose a little. You trail your mean reversion trades. You can use like, yeah, well, you have to like cover into weakness, short, sell into strength. That's what you have to do, and then it just slowly move your stop up. I don't really use any of these moving averages that much on mean reversion trades. My first partial sell, I already sold a little bit because I'm up like 10% from entry. That's a big move. That's a big move in like 20-30 minutes. And even if it bounces, say 50%, you know, 10% is 1/5 of the expected move. So, you know, you have to sell accordingly. It's a big move. You know, there is no mean reversion trades. There is no 3-day, you know, there is no such thing as sell a third to half after 3 to 5 days and then move your stop to break even, because the move is going to be over in the next 3 to 5 days, usually. So you got to sell, you know, when you get these big pops. Well, I would say the best $0 you're ever going to spend in your life is my YouTube, my blog, my Twitter, and this stream. But yeah, I agree. Stock B is probably the best $300 you will spend in your lifetime. Wow, the oil gas complex is straight up. Holy shit. This is why you need to be on these things. You know, you can't wait for, you know, you can't slack around and, you know, look for stocks that are up and like, wow, this looks good. No, you need to do this work. Either in pre-market or after the market closes. You do your scans, find good setups. These were all 5-star setups, the oil gas names. Like XUP and Gush, I've been over these things for the past 2 sessions. I even tried to buy the XUP breakout yesterday, took a small loss on it. Like all of these, they look so good. They all pretty much look the same. Like, I prefer to do the ETFs because they are the most liquid and I don't have to deal with like individual stocks. But you know, you can do the individual stocks too. There's nothing wrong with it. Well, but the oil names didn't look as good yesterday as they did today. That's what stops are for. That's why you go for 1 to 10, 1 to 20, 1 to 50 risk reward. You can get stopped out 5 times in a row, and once you nail it, you're gonna make your back 10 times. What am I looking at on the 60-minute on bingo? It's breaking down. So it gapped down. So this is, you know, it was up what? 1100% in a week or so, a little bit more than a week. So now we know it's not gonna keep going up forever, because no stock does. You know, it could, and it's getting really stretched from the moving averages. Like, even with this gap down, it's down 32% since yesterday's close, but it still has 55% to fall to get to the 10-day. Okay, so this still has a lot of downside. So what I just want is have a low risk setup on the intraday. Okay, and due to this gap down, I didn't want to do it on the opening range lows because I knew there's a good chance it will snap back, which it did, right? If you had shorted the opening range lows, you would have taken a loss on it. So I just waited it for this thing to bounce and for the bounce to end. And now it's, you know, been building lower highs for like an hour now.